So if you've been on the internet at all recently, you have definitely seen the sphere in Las Vegas. You know, the giant eyeball, the basketball, the emoji. It's a landmark for sure, but it's also a business. And in this explainer, we're going to dig into a really interesting research on the company that built it, Sphere Entertainment, to see what the real opportunity is behind all that glow.
First things first, you just have to see this number, 135%. That is how much Sphere Entertainment stock, ticker SPHR, has absolutely soared over the last year. Just an incredible, incredible run.
And you know, that immediately brings up the big question, right? Whenever you see a stock go up that much that fast, you got to wonder, did I miss the boat? Is the party over? Is it just too late to get in on this? Well, according to the answer is a pretty clear no. They think this story is really just getting started. As they put it, this isn't the time to walk away from a hot streak. Nope, they think it's time to double down. So let's break down exactly why they think that. Okay. So part one of their whole argument starts right where you'd expect in Las Vegas, because the success or failure of this very first sphere, well, that's the proof for everything else that might come next. And here's what they say is the absolute key to understanding this. People aren't just showing up to see a cool-looking building. That's not the main draw. They're coming for the content, for the shows inside the venue. And that's a huge difference, because it means the sphere isn't just a one-time novelty. It's a platform for amazing experiences people will come back for again and again. And check this out. This is the hard data that proves their point. Take a look at these two shows. The Sphere's original in-house show, Postcard from Earth, did pretty well, peaking around $101 million in quarterly revenue. But then they brought in a huge, well-known brand like the Wizard of Oz, and look what happened. The peak revenue shot up to $176 million. It's crystal clear. Big name, powerful content is what really gets people in the door. But here's the kicker. Even with a smash hit like that, the Las Vegas venue is nowhere near maxed out. I mean, the potential right there in that one city is still absolutely massive. This chart really puts that into perspective. Think about it. Las Vegas gets something like 40 million tourists every single year. And right now, the Sphere shows are only capturing about 4 million of them. That's just 10% of the total pie. Just imagine what happens when they start adding more shows, more concerts, more events. There's a giant untapped market just waiting right there in Vegas. Now that success in Vegas, that's just the foundation. Part two is where this whole thing gets really, really big. This is how Sphere goes from being a single cool venue to a potential global empire. It's all about the franchise plan. Research uses this really interesting phrase. They say that future spheres are a free call option. Okay, so what on earth does that mean? Basically, they're saying that the current stock price is based on the success in Vegas. The market hasn't fully priced in the enormous potential of building more spheres all over the world. It's almost like you buy the first business and you get the option to open a whole chain of them for free. And to really get why this franchise idea is so smart, we need a quick look at this metric, return on invested capital, or ROIC. Don't let the name scare you. It's super simple. It's just the bang for your buck. How much profit you make for every dollar you invest. Okay, now this chart is the secret sauce to the whole plan. Look over on the right. The sphere they own in Vegas gets a decent ROIC, about 6%. Not bad. But now look at the franchise model. A partner who builds a large sphere could see a return of 15%, and for a smaller one, a whopping 30%. I mean, those are incredibly attractive numbers. It makes it way easier to convince partners around the world to put up the money to build their own spheres. So what's that free call option actually worth in dollars and cents? Well, did the math. They figure that the future value of the planned Abu Dhabi sphere, plus a few more down the line, could be worth an insane $2.7 billion. All right, let's recap. We've got a proven hit in Vegas, and we've got a high-return global franchise plan. So, part three, how do you actually add all that up and figure out what the company and its stock should be worth? Well, analysts use something called a sum of the parts valuation. It's just what it sounds like. They value each piece of the business on its own, then add it all together. So they figure the Las Vegas sphere is worth about $2.8 billion. Then you add that future sphere potential we just talked about, another $2.7 billion. Toss in a little bit for their other media assets, and you get a grand total asset value of $5.7 billion. And here's where it gets really interesting for investors. That total value,
$5.7 billion, is a lot higher than what the entire company is being valued at in the stock market today, which is closer to $4 billion. In Wall Street speak, that's a big sign that the stock might be undervalued or even cheap compared to what it actually owns. And here's another way to look at it. I know this chart looks a bit complicated, but it's really just asking a simple question. Is the stock cheap or expensive compared to how it's been valued in the past? The number to look at is that 14.5x multiple. You can see it's actually lower than its average has been over the last 1, 3, and 5 years. So get this. Even after that massive 135% run-up, the stock might actually be cheaper now than it's been in a long time. So you put all the pieces together, the success in Vegas, the massive global potential, an evaluation that still looks pretty reasonable, and do one thing. They raised their price target for the stock. And they raised it big time, from $105 a share all the way up to $124.
Okay, let's zoom out for a second and bring this all home. After digging into the numbers and the strategy, what's the big picture here? What does this all mean for the business behind that glowing sphere?
The optimistic case, the bull case from this research, is really straightforward. You've got a concept that's already a proven success. It's driven by high-value content people want to see. There's a giant, untapped market right in its hometown, not to mention a scalable franchise model that looks incredibly profitable for partners. And on top of all that, you might have a stock price that still hasn't caught up to its full long-term potential.
Which really leaves us with one last big question. We've seen how the business model could work, but what does it mean for the future? Is the sphere just a one-of-a-kind wonder out in the desert? Or are we looking at the actual blueprint for the next generation of entertainment all around the world?